Interest rates, rent, and inflation are all skyrocketing. What's going to happen to the real estate industry and how can you protect yourself? Stay tuned to find out. If you're a homeowner, investor, or interested in buying property here in South Louisiana, we have all the data you need. I'm Jay Ray with Katie Real Estate, and this is your market update. So, real estate prices are a function of supply and demand, and months of inventory is how we can keep our pulse on what's happening with our supply and demand. Looking at our inventory going back to 2012, you can see we've been hovering around 5 to 6 months of inventory, which would be considered a balanced market. Starting in 2020, we've experienced well below average inventory levels and have reported inventory levels to be under 5 months of inventory. This lack of inventory has created a seller's market, and the average price in February 22 has increased from $246,000 to $269,000. That's a 9% increase year over year. So where are we going? I'm glad you asked. Well, going back to 2012, we have experienced moderate appreciation of 3%. This is well below the national average of 4.14%, so I do not believe we're in a bubble. Actually, with the impact of inflation, experts believe that prices will most likely continue to rise over the next few years and beyond. As an example, if we continue to experience appreciation at 3% over the next 20 years, our average price will be at $485,000. But if we follow the national average appreciation, in 2044, our average price will be over $600,000. Let's take a look at the next graph from the Home Price Expectation Survey. I think it will give you a very good picture as to where home prices will be according to the experts. So what are we looking at? The most optimistic experts say we could see a 62.5% appreciation by 2026. The pessimists say 23.7%. And when we average out all the predictions, we get 43.3% appreciation by 2026. So as you can see, all signs point to prices continuing to rise in the long term. Home ownership is a hedge against inflation because, as you can see in this slide, over the past 5 decades, home prices have increased faster than inflation. That means someone buying a home today can lock in today's costs, protect themselves against the rising cost of inflation, and lock in that monthly payment going forward. So it becomes mission critical for renters to understand this dynamics of buying now. Renters take on additional risk by waiting to buy. Most experts forecast high interest rates, higher home values, and if you look at the rental market going back to 1988, rent has only continued to increase with no signs of slowing down. So at the end of the day, waiting to buy will cost much more money. I hope you found this information valuable. If you'd like to receive these monthly reports, or if you'd like a free market analysis on your property, I'd love to help. Stay tuned for next week when I break down pendings, foreclosures, and interest rates. I'm Jay Ray with Katie Real Estate. Thank you for watching.